Hello everyone, welcome to GW Pro Trading. It's Gwen Michael here, and in today's video we're going to be looking at technical analysis on Gbpjpy. And I'm going to make out this analysis because I think that we have been tricked. Okay, we have been tricked into believing that we have started a new phase of downtrend. Okay, so GBP is still having a lot of things in play, and I'm going to go ahead and share with you guys, and I'm going to share with you also why I think that is also happening and when that will leave the market. Alright, so first, starting with a monthly time frame analysis, I just want to break it down to you guys and then share with you all this one bit by bit how I want to set up with this one. Okay, here we have a structured movement. Okay, so if you just look at the chart or look at the chart here, or your chart back at your home or your office, you're gonna see Gbpjpy looking just like this. Okay, so the very first thing to do when you want to start your chart identification, okay, you want to go ahead then point out what you recognize. Okay, and what I recognize is, number one, I'm going to point out to you that I recognize a very good support right here. Okay, around the 119,300. Okay, this is a very good support, and it could be around 119,200, 119,100. It could still be around that territory, but I choose to make mine 119,300. All right, because of the way I draw my support and also I draw my resistance. Okay, so I can as well see that I still have a little bit of room, okay, to still further adjust it a little bit. So it could be around 117,800. All right, so it's cool. It's whatever you want to do with your setup. It's entirely yours. Okay, it's entirely yours, and you can also do whatever you want to do with it. All right, so looking at this one here, we have, if you look at this plainly, you would understand that we have a kind of setup which I mostly look out for in the market. All right, so the best thing you can ever do for yourself as a trader in the bid, or to be able to identify what is going to happen. Okay, you should be able to identify also what happened in the past. That will also give you an idea to be able to plan and then set up in to what is going to happen in the future. All right, so what happened here in the past is we had what could have been a possible contraction, which also failed at this point of breakout, failed and then dropped one more time. So we could say that we have what could as well be a possible WXY or an ABC. Okay, I would say it could possibly be an ABC or a WXY, actually taking some breaks. Okay, so engaging some breaks in the downtrend and then looking for ways to slow down and then reverse. Okay, so this price slowed down here and then reversed around this point here back then to the upside. Okay, and looking at this one here, I would really like to put out to you guys that for those of you that are still looking at this setup, which I point out many times as what I call the WXY here, that this is not a WXY. Okay, because I got some message last year that a student actually made mention that we're looking at a WXY around 2011, 2010 structures, between 2009, 2010, 2011 structure. And I want to just also reference or look at this again and then share with you that this is not a WXY. So possibly if you're looking at this over the future, you can as well identify that this is not a WXY. Okay, so this is entirely or majorly, I would say it's just a pullback, which looks very huge for a WXY structure. Okay, so if we could be looking at a WXY, basically a WXY should be one that have internal 5-way move, say A, B, C, D, E, and then we could then look at the breakout for an the W, or the breakout for an X, and then the next drop for a Y, which we should be taking targets around the W and also the 1 to 7 Fibonacci extension of the swing, right, for the Y. All right, so looking at this one here, I want to go then break this down to you guys, because this is going to be very, very important in the future as to how you will, as a trader or as an individual, look to approach this one on the near future. Okay, because I like to break down structures or setups like this so you can understand when or how I am looking at this on my own. Okay, so and that will also help you as a trader to also identify my work with Elliot Wave and also practice and also use this on your daily life. All right, so however the drop did come, okay, the drop did come back. All right, so we had price fell at this extreme here. Okay, we had price fell around the extreme, which also, if we put up a line there, we can see that price fell around 194, 195 territory. We could just adjust a little bit nicely. I like to, mostly when I'm drawing my trend lines, okay, I'm drawing my support and resistance, I want to see more than 2 touches. So here is where I'm going to put my resistance. 194,600 is where I want to put my my resistance line. Okay, so I want to look at my resistance line in that territory, okay, because it touches or it fits the criteria for drawing that resistance. We have 1, we have 2, we have 3 touches around that point there. I can just go ahead and put that resistance line up in that zone. All right, so then we had price drop into this zone, creating what could have been a leading structure, which price should have followed same to maybe just the upside for a correction. Okay, we should have followed same for a correction, but price fell and then bounced inside of this zone. Okay, bounced inside of this zone. So I'll just go ahead, put this up for you guys, and also in the future when we're doing future analysis back on Gbpjpy, we can as well understand that this area here is a flat A structure. Okay, this is a flat retest A structure. I will call it a double A structure because this did not break. Okay, so this did not break here also because one, previous week here created the lows, here created the lows, so we can say this is a double A structure. Okay, also looking at this as a double A structure, we can as well look at this as the very first start of a leg. All right, so I pointed this out before in my previous videos. You can go back, check it. All right, so I pointed this out, and I want to do the same thing consistently. All right, that's the essence of trading. When you're looking at a structure, you want to look at the structure in the same manner which you looked at the structure. So a consolidation will be a consolidation 2 years, 3 years from today. It will remain a consolidation and will never change. Okay, so we have it here that we have a very first drop to the downside, and also have that what we're looking at here, we're looking at after a drop to downside, what we could then possibly look for would be a possible B leg. Okay, so after a very strong impulse, what we want to be seeing is a B leg. Okay, we want to see a B leg into maybe some sort of retracement up to some levels. Okay, and we're going to draw a Fibonacci from a swing high to a swing low. And then we're going to point out certain Fibonacci retracement area. As you can see, basically most of the time when I'm looking at Fibonacci retracement, I like to take into consideration the 38.2. Okay, so the 38.2, as you can see here nicely, that was cleared in this move. Okay, it was cleared in this move, and that did not send price to breaking below previous support. All right, so whatever support that was here in this territory was so strong that this area here, 38.2, did not send signal or did not send enough supply back into breaking this point here. All right, so we're going to be looking at the next target area, which is going to be the 61.8 Fibonacci retracement of this higher swing. Okay, I'm just going to go ahead and put that line for you guys, and then I put that up there nicely. All right, so I'm going to take out my Fibonacci tool right here so we can have a little bit of clarity on what we're going to be doing. Okay, so what we have here, we have an A, so we could be looking at a possibility that price could also create an internal ABC structure to create a B, because what we're working on right now is we're working out a way to our B leg. All right, so I pointed it out that immediately price left this zone. Okay, price was able to leave this zone to the downside, all right. This originally by design was supposed to be, was intended, okay, so was intended to be a correction and then the next impulse, okay. That was what I was looking at in 2018 2019 when I was taking this trade, okay. So I was looking at this as a possibility that price could break this zone and then give me a valid entry for the next push to the upside to complete the C leg. That was what I was looking at back in 2018 2019, but I didn't have that move and I had price then drop back to this zone, okay. I want to see what would happen if price would drop back into the zone. I was expecting a retest, and which we also had nicely from this previous structure which we drew support. Remember I spoke about that support. For a good support on an Elliot wave basis, you want to have 2 wicks touching each other for a monthly support, okay. For a monthly support, you want to have 2 wicks touching each other for a monthly support to be valid using an Elliot wave rule or theory, okay. So I want to have this as well. I'm going to be drawing a technical support here, and we have it that price bounce off that support, okay, making another push, then retesting that support, and this second time remain valid. So what we had here on the second time was more of an A, B, C maxed out structure, or we could as well be looking at a W, X, Y, X, Z pattern, okay. So this WXYXZ pattern fits the most for the bill, okay. Because we have 5-wave internal structure which created a W leg, and also we have the very fast move to the upside which created an X, and then we have a Y leg which should have been this completion, but price fell one more time here, making a new low that created a W, X, Y, right here, and then X, Z pattern, okay. So this is a valid pattern in the market and what we should look for in such scenarios, okay. So we have then price then from the Z leg moves to the upside, all right. So which we did point out that we have, what we have here is an A, okay. So I like to make my analysis elaborate so you guys can understand and also plan as well, because it's going to help you in the future. When you're drawing your trading plan, it's going to also help you and assist you in the future, okay. So this is now on my B leg, all right. So what I'm looking for is a possible completion of the C leg, okay, a possible completion of the C leg. And you guys know, and when we're looking at a structure such as this one here, what we're looking for is a possibility of a 3-3-5, okay. But in a real life, okay, so a 3-3-5 would be a corrective pattern, or we have a 5-3-3, okay. But in a real life situation, we might not be having this kind of 3-3-5, okay, in real life situation, but we're going to be looking at it on overall basis, okay, using the Elliot wave theory, okay. So looking at this one here, what we're looking for is a 5, okay. What we're looking for is a 5 termination to the upside before then the next drop, all right. Here we go on a weekly time frame, okay. So on a weekly time frame, after a possible completion of the Y leg or the Z leg, okay, the Z leg right here in this zone, we had what also could possibly would have been a demand build-up, okay. This was a demand build-up, okay. In setup like this, I pointed out many times that this is a demand build-up, okay. Whenever you have a start of a structure, say you have price should have been a consolidation for the next break, okay, would have expected the next break to come from that point on, and you have it that price builds up just like this, and then the next move was supposed to send price down, then retraces and then trap all the sellers in this territory here, okay, because one that is looking to sell here will look to put his stop loss here, and just maybe for a crazy trader that doesn't have stop loss and you can have this to go up in this moment will be trapped, okay. So this is going to keep adjusting his stop loss, okay. You're going to keep adjusting your stop loss, and I speak about this many of the times that if you enter into a bad trade, the best thing you want to do is to leave. You can as well re-enter when the market is ready to commit to you as a trader, Okay, so this was demand build up here. Okay, price created demand build up, or a leading diagonal created a wave A, created a wave 2, 1, 2, and then we walked up into a structure. Okay, so we're going to be concerned with this structure. What we want to see is the end of the 5-wave move, right? So we have a 1, we have a 2. What we're looking for is going to be a 3, a 4, and a 5. Okay, so we are left with 1, 2, and then 3. All right, so let's work out a trading plan if we are complete on this one here. We're complete on this one here, so we'll see what's going on here with this one. All right, so what I'm going to be sharing with you also is going to be so very important in your trading journey if you want to apply the Elliot wave rule and you also want to trade the Elliot wave successfully. All right, here we have an internal structure that started right from here. Okay, right from here we have an internal structure that started right from here, and we have wave 1, wave 2, and all this travel. Remember that wave 3 should not be the shortest wave and it should be the longest wave. And all this travel here, we have either we have a possible wave 3. Okay, we had a simple corrective pattern for a wave 2, and by laws of alternation, we have a complex corrective pattern which is of the flat pattern here for a wave 4 of this internal swing, and then we have a wave 5. Okay, we have a wave 5 in here. All right, so this is complete and for a bigger wave 3. Okay, this is complete for a bigger wave 3. All right, we have a bigger wave 3. So we have now completed our wave 0. Okay, we've now completed our wave 0 to 1 to 2 and then to 3. So what we are working on right now, we're going to be working on a trade plan for a wave 4, and on completion, we're going to see price then explode to the upside. Okay, I want to show you quickly something now before I move on to sharing with you the next big move to either of the direction. Okay, so I'm going to go down to the 4-hourly time frame, but before I go down, I just want to quickly show you something right here, and this is going to be very important in your trading life. You just stay and work this out. All right. Here we go. We'll go down on a 4-hourly time frame. Okay, on a 4-hourly time frame, I'm going to draw to you what I did in this time. Okay, what I did in this time and what I'm going to do in the next time. Okay, price is gonna start its next move. Okay, many of the times we have it that traders are mostly impatient. Okay, and this is going to also help you for the impatient traders. You're going to want to look at this. Okay, so when you're looking at a flat structure, one of the things you want to look for in a flat structure, you want to look for one, the break of the extreme. Okay, the break of the extreme. So this is the extreme of wave 3, and when price breaks this extreme, you're looking for a wave B to form. All right, you're looking for a wave B to form, and for wave B to be valid, you don't want to have a wave B extend too long, exceeding 127. In this my case, which I've adjusted or edited my Fibonacci tool into my extended and also overextended. This extended here of this Fibonacci tool is 1.271 Fib extension of, and this is 1.618. Okay, so you don't want to see price extend this long. Number one, you don't want to see B leg create more than 2 fractals. Okay, so you don't want to see B leg create A, B, C, D, E. No, it's wrong. When you're having A, B, C, D, E for a B leg of a flat structure, at that point you need to understand that you are wrong with the analysis. It's not supposed to be a 5-wave accumulation. Okay, it's not supposed to be a 5-wave accumulation. It's supposed to be, it's expected to be a fast move, which this will reflect in the market participants' reaction or what the market participants are doing, because at this point they're looking to sell right here and market drops down, all right, to the downside. Okay, so what I did here on this time here, I was waiting for price to hit this zone, and 2 areas which I was looking at, I looked at price to be back into the structure. Okay, so what I looked at that, and I also pointed out, and I moved in between time frames. Okay, I moved in between time frames, and one of the time frames I moved in between was daily. Okay, I moved in between the daily, and I also moved in between the weekly. Okay, in those times I moved in between the daily and I moved in between the weekly. Okay, so what also assisted me as a trader to be able to make consistent profit was the ability to wait. Okay, this is one of the things you want to do as a trader. All right, so we had on a weekly, that week which price ended, we had an indecision candle right here. Okay, we had an indecision candle right here, and the next candle which I expect to see after this doji, for the next push to the upside, I wanted to see the next one bullish. Okay, I want to see the next one bullish. And once that happened, the next week, going down to the 4-hourly time frame, the 4-hourly time frame or the daily first. Okay, I'm going to go down to 4-hourly. All right, the 4-hourly time frame is where you want to start. Okay, because that's going to give us an idea. Okay, so this whole territory was the indecision structure. All right, this was the indecision structure, and immediately price goes up on Monday, Tuesday. I knew that was wrong. Okay, you don't want to catch price, you don't want to catch this kind of setup yet. You want to wait for price to complete. All right, so once that was starting to move up on market opening, I knew that there was problem. All right, and I wanted to see the weekly close. However, the week closed bearish, and at that point in time, I started to draw a trade analysis. I started to draw a trade analysis that I am looking at a possible A, because this correction here looks N for an A and was very nice, and this was a possible B. Then at the end of the trading day, when I spoke with the team back then, I realized that we could have been working a W, X, and then a Y. All right, so once that played out nicely, what I was looking to do, I was waiting for a reversal of this one to the downside. Okay, I was waiting for this reversal to the downside, and it was unique. Okay, it was awesome, because that gave me the perfect entry. All right, what I captured there was a bazooka. All right, I captured a bazooka. All right, so I knew that the start of the week, which I have already ended, would break out from this point here, and I would be starting the week on a very good grounds. Okay, so I was ready to risk this amount of pips, which is 110 pips, and I was ready to then wait for the next rise to come. All right, so the next rise to come was more profitable because I captured more pips than I could have ever lost in that move. Okay, so I captured more pips, which I was looking at for the end of the wave 5. However, I did get out very fast at 450 pips because I was looking at the Fibonacci extension of this structure here. So I got out at 1 to some Fibonacci extension right here. Right, it was still a profitable trade, and it was a very good one because 450 pips against 100 pips was more of 1:4.5 risk to reward trade, and that was very nice for me to get out at the extension level here. Very nice. However, price did get up to the overextended level, but that wasn't really my concern. I was waiting for price to then validate and then start going down from that point. At the break, I wanted to wait for a retest and then continue to the downside. Okay, so using the Elliot wave is very much easy to achieve success in your trading journey if you understand what you should be looking for and how you should be set up to doing so. All right, so here we are back into another scenario here as well, which also looks similar to the one I also captured lately or before. Okay, what we have here is we have a wave 3-5. Okay, so we have a wave 3, and at the completion of the wave 3, we have 5 here, we have a wave 3 starting. So this is an A leg. As you all know, guys, I pointed out to you guys before now, and this is an accumulation. All right, this is an accumulation. All right, at the end, so this accumulation sending this price upside couldn't validate or couldn't hold this at the first test, sending price down. definitely this is setting up to be a flat pattern. Okay, so what we want to be doing is we want to be looking for the extreme of the wave C. All right, the extreme of the wave C is where the big money is. All right, the extreme of the wave C is where the big money is, and that's where we're going to be waiting for. Okay, let's go ahead, see what's also happening and what we were doing on this one here. So what I'm going to be doing on this one, I'm going to be waiting for this breakout. All right, the breakout here is going to send me a signal for me to buy. Okay, so here we started the day on a very good foot. Okay, so what we have here is we could as well possibly be looking at a downside movement, and we could as well be looking at possibly pattern could be complete, because we could be looking at 1 2 1 2 3 4, which ended as a triangle here. And remember, you want to see triangle at the wave 4 or the wave B, or this could also be an ABC, and this, I think, is complete. Okay, it's complete. One of the things I understand that it is complete. Okay, it is complete, but you want to find more validation. Okay, so until price validates and gives you a contraction before we can be looking to buy. Okay, so here we have the very first start of the wave right here, the ending structure here, first start of the wave, which we point out to be our A or 1. We have a possible contraction here, which also could be a wave 2, and we have a start of a new wave, which we're looking at them to move then to the upside. All right, so we're looking at this one to the upside, and if you're looking at this to the upside, once price breaks this point here, so this is going to be our very first point of concern. All right, once price breaks to the upside here, this is going to be our very first point of concern. So if I'm looking at taking my targets after this trade, which I pointed out back in the channel, okay, pointed out in the channel that we are contracting. Let me just go ahead and share with you guys this one here, pointed out that we are contracting. All right, and yeah, all right, so we were contracting and waiting for price to hit this point, and at that point in time I wasn't buying, all right, because it was towards the end of the New York session. I waited for the Asian session and I got in on the trade, and at that point in time I started going into profit. Okay, so I'm in profit on this one here, and here we have as well price have moved good 100 pips. All right, 100 pips in my favor. So I have my trust stop as well set in place. My very first target is going to be this zone here. I'm going to target this 250 pips, 247, 250 pips is going to be my very first target, because this is the point of concern. All right, you don't want to find that structure such as this one could as well turn out to be, I've seen this many times in the market, that we could have structures like this turn out to be a corrective pattern. Okay, we could have it that price could also turn out to be a corrective pattern of an ABC. You don't want to have that. Okay, so you don't want to have this to be your B and you don't take profit. All right, so we're looking at taking profit at our C. All right, that's my overall first profit area. As you guys know, I take statistical areas for take profit. 1 to some Fibonacci extension, and 2 1618 Fibonacci extension, okay, for second profit. So that's going to be a nice territory to look for TP1 and also TP2. All right, so I want to see what happens when price bounce in this zone. Okay, so what we're going to be looking for the overall bigger trend, or the overall confirmation for a readiness to make the next push to complete the wave 5, is going to be if price bounce off this zone back and then retest a very key environment right inside here. Then I'm going to send a signal to everyone to buy out for the next 1000 pips. Who's ready to back that 1000 pips? We're going to be looking to back that 1000 pips, because the bigger the correction, the bigger the explosion. All right, the bigger the correction, the bigger the impulse. Okay, so we're going to be looking at, probably price could be back into this point here, and we could be looking at targeting 1,000 pips. 1,000 pips. All right, 1,000+ pips is going to be what we're going to be doing in the week ahead. All right, so we could be looking at taking these trades into the new year 2022, and then, all right, we're going to target 1,000 pips, because first I want to target the 1-to-some Fibonacci extension. Apart from the fact that I'm going to have to target the extreme, okay, the extreme first, which is going to be about 900, possibly 830 pips. I'm going to have to target the 1-to-some Fibonacci extension, which is going to be 1,116 pips. Wow. All right, so that's what we're going to be doing. Stay tuned, and then I'm going to share with you when that is ready, and also the full breakdown. Subscribe, like, and also share with friends. That's the best thank you, and it will also help in the question of videos such as this one. See you next time. Love you all.